Thank you for staying with Benchmark. In this final segment of our show today, Anushan Selvaraja attempts to find out more about the stocks to watch on the Colombo Bourse. Plus, why is it that foreign investors continue to play a secondary role in our market, and what must be done to revive confidence in the market? Let's listen in.
Welcome to the Voice of Business. Joining me on the show this week is market analyst and LMD columnist Hasita Premaratna. Now, Hasita, you say in your column in the forthcoming edition of LMD, which will be out early next month, that the blue chips are the stocks to watch, and by implication, perhaps the counters that investors should now be looking at. Can you elaborate on this?
Yeah, I think if you really analyze the last 3 years, market movement, particularly from the index side as well as from the earnings growth point of view, there is clear evidence that the all share price index, which covers all the stocks, have appreciated quite sharply compared to the Milanka price index. Now, if you take 2009 and 2010, both indices were somewhat similar in terms of the movement. They both appreciated in the range of about 95 to 100% in 2009, and then in 2010 about 120% approximately. Now, during the same period, the earnings growth also supported both the indices, but in 2011, if you look at, things have changed. Milanka index year to date has come down 11.5%, and the all share price index has gone up about 5.6% year to date. So essentially what this means is that Milanka stocks have taken a back seat, and the question that we need to ask ourselves is whether is this fundamentally justified. Now, if you take in contrast the earnings growth primarily in the Milanka stocks, which I would probably say not all the stocks in the Milanka are fundamentally sound. The majority of the stocks in the Milanka category are fundamentally sound blue chips. So these stocks have shown much faster growth in earnings during 2011 compared to the broader market where the SBI is representing. If you take a 12-month view with the fresh funds expected to come in the next 12 months to the market for investment, there will be quite a few blue chip counters which might look attractive in the broader scheme of things, because the valuations have now returned to attractive levels. So with those stocks that show faster earnings growth, I think definitely there is more potential in those stocks to take positions. When we see that the earnings growth is coming predominantly in the Milanka stocks, in the next 12 months, if you take a view of a 12 months view, I think now it's the time for investors to revisit into the fundamentals and look at some of these Milanka stocks rather than running around with these smaller counters which go up one day and come down the other day.
Now, why is it that foreign investors continue to play a secondary role in our market, Hasita? Are you expecting any changes in the budget to address this and perhaps entice foreign participation on a much larger scale?
Well, I think foreign investors are not here for two reasons. One is in the last few months the activity levels are lower because the global markets itself have been suffering. They've gone through major beatings. So most of the investment funds obviously have taken a back seat and they've taken a wait and see approach. And I think that global scenario of uncertainty won't change in the next 2 months. So it might take a little more time, probably maybe the 6 to 12 months time frame. We should see definitely things moving on, and probably more opportunities in this part of the world, particularly them looking at investing into Asia, where Sri Lanka should see as an opportunity. But on the other side, I also see that the Sri Lankan markets valuations, which were somewhat high compared to the relative markets, is also having a concern on the foreign investors' mind. But with earnings growth coming in, with selected stocks offering growth potential and relatively okay valuations, I think the foreigners will probably look at the scheme of things maybe with some kind of a window from now, say about a 6 months window, and then when they want to deploy fresh funds into the market.
What must now be done to revive confidence in the market, given that the rumor mill and speculation have been dominant in recent months?
I think there has to be both short and long term strategies that has to be adopted by, I would say, from the authorities. First of all, from a shorter term point of view, it is important that some of the issues that are being currently discussed, particularly on insider trading side, particularly on some of the stocks that are kind of moving, in an adverse ad hoc manner, being addressed. So if you can address some of those areas and give some specific guidance that those issues are being addressed, I think the investor confidence is likely to improve in the shorter term. But more looking at the longer term solution, medium to long term solution, I think what is most important is to go to the grassroots of the problem, which is I think the lack of investor education. There have been a lot of investors who have come to the market in the last 2 years, maybe three years, but whether they were properly educated, whether they know what they're doing is a big question mark, because many people have come to the market recently because they felt that, or they heard from somebody, or they read in a newspaper that market you're gaining 100% type of appreciation. So everybody has come to the market looking at making 100% return in a month or a day or two, which I don't think is going to work. That aspect has to be communicated very, very soundly to the grassroots, particularly to the retail investor, who seem to be coming into the market and kind of getting lost in the market. In the good times of the market, they were all happy, they were all kind of celebrating their gains. But when the market started to go through this bad patch, naturally those who didn't follow the basics, follow the fundamentals are suffering. So I think these investors need to be educated, and I think the authorities have to take very bold, active, aggressive steps in order to take that education route, where maybe the stockbrokers themselves also have a very leading role to play.
Now, Hasita, are you satisfied with the action being taken by the SEC to counter insider trading? Is this a case of too little too late, and should the SEC name people, investors or firms as a deterrent to others?
Yeah, I think definitely the things that have been done in the recent past are good. The action has been taken, but the question is whether some of these action are really materializing to to address the root cause of the problem. And also some of the actions that have been taken after quite some time. So there has to be more timely sort of aggressive sort of approach. But too much regulation in a market is also bad. But having said that, at a time when things have been sort of going a bit out of control, it is important that authorities maybe intervene a little aggressively, but then they need to step back afterwards, because the over-regulated market also can be a very negative place to be in. So SEC has to be a little flexible time to time, but I feel at this point of time, definitely they have a lead role to play, and some of the actions they take has to be pretty much publicly made aware. I don't think that fines behind the doors and kind of thing is going to really bring that communication that SEC is aggressively taking steps and countering this type of bad behavior in the market.
That was Hasita Premaratne speaking to Benchmark's Anushan Selvaraja. We hope you enjoyed our show today. We'll see you again next week. Enjoy the week ahead.